Hello everybody, this is Toni Turner and welcome to the market now as of about 12:30 p.m. Eastern on Friday, June the 10th. Before we start, please know that all of us at ToniTurner.com wish all you dads a very, very happy Father's Day. And now on to the market. U.S. stocks opened lower today and so far they've remained lower, weighed down by technology stocks. And that's on the back of slash sales forecast from chipmaker Broadcom. On a more positive note, retail sales increased in May, and sales for the prior month were revised higher, suggesting a pickup in consumer spending that could ease fears that the economy was slowing down sharply in the second quarter. And on that note, let's go on and look at some charts to give us some insight into the week to come. First of all, we'll look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that tracks our S&P 500 benchmark index. Now today when I captured this chart, the SPY was trading at $289.07. It is still white knuckling its green line here, the 50-day moving average, which is coming in at $287.17. So the SPY is trading right above that. Why do we care? Because institutional traders do watch the 50-day moving average. A lot of us do, and when price of any asset falls below the 50-day moving average on a chart, it's considered to be at least a slight negative. So we like to see, if possible, our numbers above that 50-day, the green line on this screen. So far so good, trading again up here at $289.07 or about $28.90 on the S&P 500 itself. Now, of course, the SPY is still above the all-time closing high on April 30th, which touched let's see what I have here, $294.02, and that was about $29.45 on the S&P 500 itself. Now 2 weeks ago, the SPY fell to an intraday low of 273 or 27.30 on June 3rd. That was kind of a hold your breath moment because it fell through the 200-day moving average and stayed below it for 2 days. However, then fortunately it rallied the remainder of the week. Now, we talked last week about the very subtle, shallow head and shoulders pattern, which is a top reversal pattern. Usually when you see a head and shoulders, here's the left shoulder, the head, a little right shoulder here. We have the neckline, which I drew here. When you see price make a head and shoulders after being in an uptrend, this is called a top reversal pattern. And when price breaks below what we call the neckline, which is the horizontal line I drew here, and that's where support is, when price falls through that, we usually say, oh no, because it is a negative factor. However, fortunately enough, the SPY again held that 273, which we did have slight price support that from before. It did manage to rally up through prior resistance. And last week we said, let's see if this, what I was going to call a throwback rally here, could move up into, see, this is price resistance here. These are scared and mad people when price starts falling that throw shares on the market, causing resistance. However, the SPY managed to move back up through all of this resistance here, at least so far, and again is trading above its 50-day moving average currently. The price is about at 289. So that was a positive move. So what we do here now, we do have resistance at $291.50 or about $29.15 on the S&P 500 itself. Next week, it's going to be very important to see if the SPY can hold above its 50-day line, the 50-day moving average, and if it cannot, now I imagine that if the Fed, which is announcing interest rate change on Wednesday, I imagine that if the Fed announces a rate cut, I suspect, I don't know for sure, no one does, but I suspect the market will rally because, of course, the market always welcomes lower interest rates. If the Fed does not announce an interest rate cut, the SPY may start falling a little bit, may pull back from there. We do have support here at 280. We do have some price support there, as I said before, at 280, 2800 on the S&P 500. We do have more at the 200-day moving average at $277 right now and 26 cents. And of course, more down here at that 273 line. So let's wait for the FOMC announcement, the Fed announcement, and it will be interesting to see what that brings. Okay, our next chart is the Invesco QQQ. We're going to look at that this week. The QQQ, as you all know, represents the NASDAQ 100, which is an important index in the market. The top 5 holdings of the QQQ are Apple, Microsoft, Amazon, Facebook, and Alphabet. And together they represent a little over 43% of the fund's holdings, so it's important to see what goes on with them. Now, the QQQ made an all-time closing high on April 29th at $191.02. Today, when I captured this chart, the QQQ was trading at $182.42. Now, it's staying up pretty well. Consider the NASDAQ got hit earlier this morning. Of course, that call from Broadcom on lowered sales numbers, that did not help. And semiconductors are a pretty big portion of the NASDAQ. So they have the ability to drag it down. And once one semiconductor announces bad numbers, a lot of them, the rest of them fall in sympathy with it. So far, though, the Qs are holding up very nicely, again at $182.48, even with that bad call on Broadcom. The Qs are trading just, or it, I should say, is trading just below the 50-day moving average. Amazon and Facebook have been a couple of the big components of the QQQ that have been holding it up. So despite the hit from Broadcom and other semiconductors, there are some of the big momentum stocks here that are holding the Qs up, at least for now. So we're going to have to keep an eye on the Qs, see if in the coming week it can move back up over the 50-day moving average, or if it needs to move down a little bit here. We have support at the 20-day moving average, the red line at 179, moving average support and price support. And of course, then there's this low down here at about 169. So we do have more support here if it does need to come down. But of course, if there's a rate cut, that will help almost all stocks on Wednesday. And if there isn't, it won't. All right, so let's go on to one more item here that we'll look at that, again, will have something to do with interest rates. And of course, the truth is, my opinion is the world pretty much runs on interest rates. Interest rates are the cost of money, and that's a very, very important component in every country's stock market. So what we're looking at right here is a daily chart of the iShares U.S. Home Construction ETF, symbol ITB. Now, it has 46 holdings, this ETF. We've looked at it before, but it hasn't been in a while. The top components are DHR, D.R. Horton, Lennar, NVR, Pulte Homes, Toll Brothers, and Home Depot. Now, since the December 26 lows at $28.25, the ITB has made a very nice uptrend here, if I could draw a straight line. Made a very nice uptrend here, then pulled back a little bit with the rest of the market in May, came down to about $36 and change, then rallied back up again. It's over its 50-day line, and notice how the 50-day moving average worked as support almost all the way along this nice uptrend on the ITB. So today when I captured this chart, the ITB was trading at $39.20. It's recently, it's had this resistance line here that it traded along in April and May, then again fell the end of May with most stocks rallied back up. And right now, though, that's at $38 and change. Today, the ITB started breaking out over this consolidation, or this resistance or consolidation line, whatever you want to call it. And again, when I captured this chart, it was trading at $39.20, nicely above the 20-day moving average and the 50-day moving average. And the 50-day moving average is now coming in at $37.87. So, and if you will note down here on the RSI, the ITB is not yet overbought, and the MACD is down just over the zero line, but the signal line is above the MACD line. So what I believe it's breaking out today on anticipation that if the Fed lowers interest rates, home sales could move higher, and that makes sense because home buyers will be paying lower interest rates if the Fed lowers interest rates, and they'll be paying lower interest rates on mortgages. So this could be buy the rumor, sell the news kind of a thing, but if the Fed does lower interest rates on Wednesday, I feel pretty sure that there's a good chance that the ITB could continue its uptrend here and move higher. So if it's positive the first of the week, I may add shares to my portfolio. My initial stop here will be a close below the 50-day moving average. Again, that's $37.87 right now. And that's a pretty tight stop, but in this market, I'm good with that. So keep an eye on it. Now, again, know that if the Fed does not lower interest rates on Wednesday, the ITB could fall back a little bit, but it's still in a pretty good uptrend, so we'll see here if it can continue. And now, on to the coming week's economic reports, but first, please join us this coming Monday, June 17th, for our next session of Toni's Market Club. And by the way, we've had some real winners lately. If you are not sure how you can make money in the market right now, please let us help. During our session, we will talk about which side of the market to trade, have a mini trading lesson, and I will give you stocks and ETFs excuse me, that might become ripe for high potential trades. Can't attend the live session? No problem. The recording is available to all of our members just a few minutes after the session ends. This is a low-priced, high-value opportunity to learn how to trade more successfully and make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now on to this week's economic reports. On Monday, we have the Empire State Manufacturing Index. Tuesday, we have housing starts and building permits. Wednesday, we have our usual crude inventories and that all-important FOMC rate decision in the afternoon. On Thursday, we have our usual jobless claims, the Philadelphia Fed report, and our usual natural gas inventories. And on Friday, we have existing home sales. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.